Hello, and welcome back to the Fintech Takes podcast. Today I have a very special episode for you. This is a conversation about open banking in Canada. Now, this might come as a bit of a surprise to you because for most of the last year, I've spent a lot of my time obsessively studying what's been happening in open banking in the US. And the US has not been short any drama or fireworks. It's been very fun to cover. However, more quietly and without nearly as much fanfare, there's been a lot happening in the Canadian open banking market. So much so, in fact, that it appears, if things go the way we expect, by the end of 2026, Canada might have the most advanced open banking and indeed open finance market, at least from a regulatory perspective, of any jurisdiction in any country on earth. Now, that is quite a statement, given where Canada has historically been on all things fintech and open banking. And it's worthy, I think, of its own episode to unpack what's been happening in Canada, what the drivers of this regulatory progress have been, and what it means not just for open banking in Canada, but open banking in the US and open banking around the world. Now, I couldn't think of two better people to have this conversation with and to get smarter about open banking in Canada with than Steve Boms, Executive Director of the Financial Data and Technology Association, North America, and Dan Murphy, founder of Sunset Park Advisory, former member of the CFPB who worked very closely on 1033 and open banking, and someone who I've had on the podcast before and collaborated with a number of times. Dan and Steve know everything there is to know about open banking. They've been paying very close attention and working very carefully in the Canadian open banking space. And they share with me what's been happening, what it means, and why we should all care. It's a great episode. It's a shout out to my listeners and subscribers in Canada. I see you. I respect you. I apologize if I've ever made jokes at your expense. Canada is killing it right now, and I can't wait for all of you to hear why. So without further ado, here is our episode on Canadian open banking. Okay, Steve, Dan, thank you so much for joining me.
Thanks for having us, Alex.
Yeah, it's great to be here again.
I'm delighted to have you back, Dan. Steve, is this your first time on the podcast? I feel like we talk fairly frequently about open banking stuff, so I can't remember exactly.
First time I'm aware that you're recording me during our conversations, Alex.
So you know about the secret podcast
Yes,
that I record without
right.
telling people. Okay, all right. Well, that is unfortunate and will make this conversation more awkward, but we'll press on. I really do appreciate you guys hopping on. We're changing things up a little bit. And what I mean by that is I think normally when I record a podcast with you, Dan, or secretly record you, Steve, I am mostly talking to you guys about what's happening in the US open banking landscape. Today, we are going to talk about our wonderful neighbors to the north in Canada. By way of background and apology, I suppose, I have from time to time made fun of Canada in my newsletter. I will admit openly, not because I don't love Canada. They are truly my neighbors to the north since I'm here in Montana. But I have noticed over time that fintech innovation, both from a market-driven perspective and from a regulatory-driven perspective, in Canada just moves a little slower than it moves in the US. And at times in the past, there have been hiccups, snafus, delays, specifically relating to the implementation of open banking in Canada. And once upon a time, that was something I could sort of amusingly point out and kind of joke about because I felt really good about the progress we were making here in the US. Now, as I have heard from some of my Canadian subscribers in more recent times, the shoes are very much on the other feet now. And Canada, I think it's pretty fair to say, has kind of leapt past, at least in some respects, the US on open banking regulation. And I wanted to get my hands around exactly what's happening there, why it's happening, and what maybe we can learn from the kind of like tortoise and the hare type progress on open banking regulation across multiple markets. So, Dan, I want to ask you a little bit about that. But before we do, Steve, for those who don't know you and FDATA, since again, this is your first time officially being on the podcast, would you mind giving a quick introduction?
Yeah, happy to, Alex. And thanks again for the invite. So look, FDATA is a trade association. It has its roots in the UK's open banking journey going back to 2013, 2014, and has been the convener of the third-party community to provide policymakers with the perspective and input into the design, implementation, and evolution of open banking and open finance frameworks across the globe. I've led the North American chapter of FDATA, which is now its own standalone entity, for almost a decade now. And so we've been active in Canada and the US, engaging with policymakers on this kind of tortoise and hare journey. And so very much looking forward to sharing the perspective of both our Canadian and US members as we think about where Canada is going during today's conversation.
Excellent. Well, I'm looking forward to that. Dan, I'm going to start with you because in your prior life, you were at the CFPB working on open banking regulations. And one thing you and I have talked about, probably offline, I don't know if we've talked about this on a podcast, but I always find it really interesting is the idea that while someone like me, who mostly covers the US, might have a very sort of narrow view into like open banking and what's happening in this market. That's actually not true with regulators and policymakers. And there actually is a little bit more of a sort of sharing from and learning from ecosystem of policymakers, particularly on certain issues like open banking. And I was curious if you could just give us a little bit of a window into like that and your experience with that, kind of the global open finance policy like ecosystem, and how you guys at the CFPB and then kind of how other regulators try to sort of learn from and build on top of what other countries are doing.
Yeah, absolutely, Alex. Happy to jump in on that. So I think it's true that this in particular has been an area that different regulators have taken different approaches to around the world well before we sort of got to the latest and greatest in the 1033 fight over the last year or so.
Yeah.
Right. So a couple things on just sort of the way I've come out this just personally. One is that a random fun fact about me is that I went to grad school in Europe and actually got started thinking about this in part by writing a thesis on, at the time, what was something that was very much top of mind for folks, which was marketplace lending and associated policies that could help close the small business credit gap for SMEs. And so this was sort of one of a suite of policy fixes that was being considered after the global financial crisis in Europe, where, if you remember, small businesses were having a much, much harder time recovering from the sovereign debt crisis than small businesses in the US were having. And so data portability was sort of in vogue at the time. And then PSD2 in Europe became sort of and that's payment services, the second payment services directive, to not use the acronym, kind of became the main thrust of policy that folks talked about for a long time. Shortly thereafter, in the UK, they followed that up with what we today all call open banking, and then the structure that was put around that. And then we were really off to the races, right? And when you had all sorts of different regulators and policymakers taking this on from different jurisdictions around the world. Some folks, like those in Australia, took a consumer data rights approach to this, with a broad suite of consumer data rights across different verticals. Others, such as in India, took a really completely different tack, where they started with issues much more broadly related to digital identity that allowed them to build from the ground up a very different type of system than the systems that we're more familiar with. And then in the US, you have Section 1033, which we've talked a lot about. But with all of that context, there's definitely a lot to learn from different regulators and policymakers' experiences around the world on open banking. And that was one of the things that I tried to bring a little bit to the CFPB process. But it was something that I think a lot of us in the space, folks like Steve as well, have thought a lot about. And I should say, actually, one of the more informative things I've done over the years on open banking is going to the FDATA conference that used to be hosted in Edinburgh, which was really a great conference that brought folks from all around the world, policymakers from very different jurisdictions as far afield as India and Japan, to talk about their experience in standing up open banking frameworks. And so the Edinburgh conference was really just, the type of place where folks early on were starting to think about this, both policymakers and industry. So, all that being said, I think there's probably two things that come to mind for me about the limitations at the same time of what you can learn from other jurisdictions. One is mandate, right? And so if you look at, for example, the UK, you have regulators that have a really strong competition mandate, and that really drives, from the beginning, the way they were thinking about open banking and data portability. And when you have that kind of competition mandate that's front and center, that will frame a lot of your thinking. The other thing is market structure. So it's one thing when you have, just a handful of banks and a handful of fintechs, or if you rewind the clock to the post-crisis years when the fintech industry was still more nascent, very few fintechs, it was really just starting to become a thing a little bit more. Well, in that context, you're designing a very different framework than in the US, for example, where you have thousands of banks and credit unions and thousands of fintechs using consumer permission data that already exists, and you're really trying to put rails around a market structure that's already moving. So it's just a very different context there that are also important to keep in mind. You can learn a lot internationally, but you also sort of have to measure that learning and apply it to the context that you're working with in the US, or in our case for this discussion in Canada.
Yeah, that's fascinating. And Steve, I want to get your perspective on this question as well, because, Dan, to your point, I do find it really interesting to draw these points of comparison, because on certain fronts, I would imagine that there is a lot to learn, right? Like mechanically, we tried to do it this way. Oops, that didn't work. What we found was that it works much better to do this way. So there is just an element of learning there that's important, and being able to build on folks that were early and then kind of building on top of that makes a lot of sense. But I think, Dan, to layer onto your point about the sort of constraints or the challenges, you're right. I mean, the markets are just very, very different from each other. And I think a lot of it relates even to not just the structure of the market, but the maturity of the market, right? So using India as an example, when you're jumping to digital finance without having hundreds of years of sort of more traditional finance and brick and mortar branches built everywhere, it's just a very, very different environment. And in that environment, you might say, well, we should start with digital identity as the base and then build on top of that. And then I think there's even cultural elements to it as well.
Definitely.
And Canada, we're going to get into it, but I'm always so fascinated with the mind of the Canadian consumer and how they perceive their banks and who they work with versus how I, as a US consumer, might sort of perceive them from the outside. And I remember I was talking to a central banker in Brazil, actually. We were talking about FedNow and faster payments, and I was marveling at the progress that they had made in Brazil. And I was like, how did you do that? And they're like, oh, it was easy. We just told the banks to do it and they did it. And I was like, oh, well, that does sound straightforward. And when I talk to my friends at the Federal Reserve, they don't have that mandate, Dan, to your point. And, even when they do things FedNow, again, as an example, we have this culture in the US where we freak out if there's anything that smells like an invasion of privacy. And we have this very sort of libertarian undercurrent that sits underneath our politics and our culture. And I think all of that rolls up to the different experiences in different countries. But Steve, I mean, obviously FDATA sort of comes out of Europe and you guys have a sort of international lens as well. What's been your experience on this question?
So look, I think a couple of things, right? And I'll bring it back specifically to Canada here. So Canada is a Commonwealth country, right? So to the extent that any country is closely watching what's happening in the UK and Australia, Canada certainly is one of those, right?
Yeah.
I was struck, Alex, by your comment about culture, because that was a point I was going to raise, right? In the 10 plus years that we've been trying to push open banking forward in Canada, there is a conservatism with a lowercase c that policymakers, consumers, bankers take to financial services in Canada that I continually find surprising. And if you have conversations about innovation in financial services in Canada, you probably can't go more than an hour before somebody says some version of, it's a source of pride that we didn't have the same effects of the 2008 crisis in Canada as other countries did, because we're so conservative about how we regulate financial services. And the cooperation between the big banks and the government is so close. That's what really kept us safe. And so it's this really interesting combination of a conservative cultural approach to innovation and financial services specifically with, let's just call it what it is, an oligopoly where 90% of consumer deposits rest with 5 financial institutions. And so as a result, you haven't seen the same type of market-led adoption of open banking enabled services in Canada as you've seen in most other jurisdictions, even that haven't done this from a regulatory perspective. It is also the case that most bank customer terms and conditions say that you violated your user agreement if you use a third party and share your username and password. So the system is just, it's very different, right? And it wasn't until very recently that those incentives started to change for a number of reasons, both kind of political, but also policy.
Well, let's get into that because I think that's exactly what I wanted to talk about. And I'm glad you brought all of that up because, again, I joke, I have Canadian subscribers. My Canadian subscribers tend to be like fintech founders for the most part. And they're very frustrated by that small c conservative thing that you just described, where they're like, come on, like, I know there's an opportunity to like create better products or to disrupt or even to like help create more value for customers. But it even extends to the end customers themselves. I mean, I think like if you talk to the average Canadian consumer, they're not pissed at their banks in the way that we are in the US. Like in the US, we have this just like eternal, like deep dissatisfaction with like anything that's not perfect. And, you know, I love Canadians because they're just like, no, you know, it's fine. Like I don't spend a lot of time thinking about it or obsessing about it or being mad about it. And so it just, the seeds of disruption and the way that market-driven force works is different in different countries. And Canada's a great case study for it. Steve, take us inside like what those factors were that have been changing things recently that have kind of led us to where we are now.
Yeah. So just Alex, I mean, Henry Ford has the infamous quote, right? If I would have asked consumers what they wanted, they would have said a bigger horse, right? And so there is this factors like you don't know what you don't know until you've been presented with it. You. Right.
Yeah.
We did some survey data. This is years ago now. And we asked Canadian consumers and Canadian small businesses, do you feel stressed when you're interacting with the financial services sector in Canada? To be clear, this was not like, are you stressed about your financial health, which is a very different question. This is like, you've got to manage your books. You've got to make a payment. You've got to open a bank account. You've got to apply for a loan. The data was incredibly compelling. More than half of Canadian, both small businesses and consumers said, yeah, I do. And that data became even more pronounced when you were a woman, when you were a new Canadian, you had immigrated from another country, you were a minority Canadian, or you were a very, very, very small business in Canada, right? Like staggeringly much higher. So from a policy perspective, I think the government, and now this is several governments ago, right, has seen that stress has continued to elevate. They watched the rest of the world begin to pass them by in innovation. And so from a policy perspective, there were all these imperatives to move more quickly. The political imperative, I think, is really novel because that really has only come about over the last couple of years. And it's more in the lens of the macro political, kind of geopolitical trade and competition that's happening between the US and Canada, and where Canada has to look for other trading partners. And so there has become this real sense to, you know, from the government down to individual Canadians, of Canada has to find a durable, independent way of innovating and continuing to evolve its economy in a way that can be more competitive, because it cannot rely on the US to be their innovative partner the way that they have for years and years and years and years. And so it's those two things happening at once that has created this moment where not only, Alex, to your point, is Canada saying we're going to move forward. If it's delivered the way it's been envisioned, Canada leapfrogs virtually every other country that's put regulations in place for open banking. And what we're really talking about is open finance.
Okay, so let's talk about that now, because that's quite a statement that not only do they sort of catch up, but they leap ahead. And I want to understand exactly what you mean by that, because again, like to those of us who are sort of used to this sort of Canada versus US dynamic, that's very shocking to hear, right? And what you just described in terms of like more of a focus on competition and being able to compete in a global marketplace, like those kind of bottom up factors make a lot of sense. Is there also an element of like kind of taking the best parts of what they've seen work or not work in other countries? Like, help me understand from a policy perspective. I think it's called the Consumer Driven Banking Act, right? What is that? What are the main kind of policy components of it? And why is it a leap forward in that way?
It definitely takes lessons learned from other jurisdictions, Alex, right? And Dan can talk more about the kind of regulator view of this, but you know, Canada has had a number of conversations with their counterparts across the globe, right? And there are a few key things I think they've heard in those conversations about what other jurisdictions would have done differently if they could do it all over again. Lesson number one was go bigger, right? Just checking savings and credit card accounts is a great place to start, but it's not enough. because the average consumer or small business has accounts other places, auto loans, mortgages, investment accounts, whatever the case may be. And so the Canadian framework includes those accounts and more, right? Lesson number two, and this is particularly looking at the US experience, is small businesses need these tools also, right? So small business accounts need to be covered affirmatively. And Canada's proposal isn't just small businesses, it's all business accounts would be included in the scope of the law. Mm-hmm. And then the third thing that I would highlight, Alex, is Canada, to my knowledge, is the only government that has affirmatively said, we are going to enable right access in this system, right? Mm-hmm. And when they say right access, they're clear. They're not just saying payments, although that's kind of the common use case we all think about when we think about right access. They're talking about account switching. They're talking about digital ID, right? And reusable digital ID in the context of open finance. And so they're piecing together kind of all of these opportunities missed or all of these lessons learned from other jurisdictions, putting a stake in the ground and saying, this is where we're going, and we're going there over the next 18 months.
Wow. That is amazing. Dan, what's your reaction to this? I mean, like, are you being like, man, I'm jealous, or like, what are you thinking about this?
I mean, a little, but at the same time, right? I think I had a similar opportunity, and when I say the team of the CFPB had a similar opportunity to sort of take a look at what had been done around the world, also as a relatively late mover on the regulatory side, and learn from what others have done. And Canada has even more data because they got to watch us go through some of this during the rulemaking process over the last several years, right? And so maybe to give one example, I can remember conversations with regulators that I had at different points where, you know, there were questions about how much do you lean in, how much do you let the market, you know, sort of take this on. Maybe one good example of that is around standard setting. And so if you look at, for example, Australia, they took a really, really prescriptive approach to technical standards for open banking APIs. You can even sort of go and find the GitHub page. There's a lot you can go find, and it's really an incredible accomplishment what they've done. And I would never want to take anything away from that. On the other hand, once you've done that and you've put it in place, that's just the beginning of the effort, right? And that, because now you have to maintain it. Now you have to grow it. Now you have to make little changes as things are needed and things don't work. You're really putting the regulator in the position of having to run a system that's incredibly complex. And maybe for Australians, that's something that they feel more comfortable with and they think they have the capacity to do. I can just say from my experience, it wasn't something that I felt like at the CFPB we were equipped to do at the time. And I think reading between the lines from what's come out in Canada, it sounds like they've taken a similar take where they're going to try to designate some other body to run this, but they themselves, I don't think, they're not going to be prescriptively assigning technical standards that the private sector needs to follow. And so I think those are the types of sort of late mover advantages that you can have, is learning those lessons. And that's fantastic, right? And I think maybe another one that maybe somewhat more cynically, Canada might have had the opportunity to learn, having watched the US experience now, is, you know, there's a lot of similar market participants in Canada and in the US, right? Obviously, it's not one-to-one, but there's a pretty decent, you know, overlap there. And so I think having seen the lawsuit play out in the US and seeing everything else the way it's gone, Alex, you've done a really great job of covering all of this. They, I think, have a probably better understanding now than they may have had previously of where different institutions' revealed preferences are on open banking as opposed to their stated preferences. And I think that's really useful from a regulator perspective to know who you're dealing with. And so that's something that I might be slightly jealous of them on.
Well, that's totally fair. And I want to hit both those examples you just shared. So the first one is on like how prescriptive or how involved the regulator is versus sort of coordinating with the private market. Obviously, like I think technical standards were one of those ones that was a real obvious like learning point from Australia and from early jurisdictions that did this, where once you sort of saw like the obligation they signed themselves up for by being so prescriptive on technical standards, especially given like, I mean, we haven't even talked about AI. I'm sure we'll get there at some point, but like the pace at which all this stuff is changing, like, it's just not, I don't think, in any regulator's wheelhouse, no matter how effective they are at kind of keeping up with technology, to be very prescriptive in setting technical standards. I did notice, I think, and Steve, correct me if I'm getting this wrong, that they are going to have a public registry. And I'm curious in Canada, because there have been other areas, and Dan, I know you fielded a ton of these requests when you guys were getting comments from industry, but there are other areas where I remember in 1033, industry going like, yeah, that's a problem. It would be great if the CFPB could just solve that, or if they could like monitor every third party and have an accreditation system and like do all of these things. And obviously you guys deferred from doing those things, I think for very logical reasons around resources and the size of the market. Steve, is Canada taking a slightly different approach when it comes to like risk management, liability, public registry of like participating companies? Like what's that side of it look like, and how different is it?
It's going to be quite different, Alex, but I want to also acknowledge we don't have all the details yet, right? So
Sure.
we're at the final stages of the legislation, and that will then lead to the regulations that will spell some of this out, right? However, at a broad level, what I would say is the U.S. experience over the last 12 months or so has been very instructive to the Canadian market, right? If you go back to the inception of what became consumer-driven banking in Canada, it goes back to their budget in 2018, where the then Minister of Finance, Minister Morneau, created an advisory committee to explore whether or not open banking was worth pursuing in Canada. And if the answer to number one was yes, then number two, tell me how, right? For the 6 years that followed, after the advisory committee came back and said, yes, it is worth doing, there was this very public debate about should it be market-led or should it be government-led? And every time you would have this conversation, proponents of the market-led approach would point to America and they would say, look, pre-2024, there are no regulations here, right? Look at how vibrant that market is, and it's working, and 100 plus million consumers who are using at least one fintech tool. Like, that's proof that the market can solve for so many of these things. And then what's happened over the last 14 months or so has happened, right? And so you've got litigation over very, very kind of high-level requirements for how the system should work. You've got one large bank trying to assess fees and commercialize data access. And so I think the lesson there for the Canadian policymaking community is, okay, it's got to be regulatory-led, right? Like, the market cannot do this on its own. The incentives aren't aligned. And so they've been very clear. The legislation that is moving through Parliament right now calls for a public registry with a directory of all accredited third parties. The Bank of Canada will require accreditation for third parties. And so that's going to be the first order of business once they get the statutory authority, is to put out a proposal for what accreditation criteria will be, how you go about getting accredited, enforcement, oversight, all of those things. There will be prescriptive data security and data privacy requirements as part of that accreditation. There will be a formal complaints process that either the bank will manage or they'll create some type of new entity to do it. And so in general, Alex, I think the lesson that Canada has taken is it can't just be delegated to industry, that there's got to be, at a minimum, very, very, very close oversight by the government. And in some cases, only the government is equipped to do some of these functions.
Got it. Okay, that makes sense. And it sounds like the law itself is just naturally much more prescriptive, which, going back to, Dan, your earlier point, like 1033, not a lot of words, not a lot of specificity. So like, that is a problem. I don't know if there's a Canadian equivalent to like Loper Bright and like the dismantling of the administrative state in Canada, but like, fundamentally, I can see how the differences here do make a big difference and have a big effect. The other thing, though, that we're bringing up that I want to just double click into is the banks and how they're taking all of this, because obviously, Dan, as you were saying, there's a difference between stated preferences and revealed preferences, particularly when you're an incumbent and you have business lines to protect, or you have a certain way of doing things that doesn't really necessarily want additional competition. Everything about sort of the highly competitive, large incumbents crushing smaller competitors, like, take that and magnify it by 1,000. And that's kind of the system by design in Canada, going back to Steve's point about 5 large banks dominating the market. And, you can call it closely coordinating with regulators to prevent financial crises. You can call it regulatory capture. I guess it sort of depends on what's happening in the market at the time. But like, how are Canadian banks taking all of this? And Steve, maybe I'll go to you first on that one.
This is a question of how optimistic or pessimistic a person you are when you think about this, right?
I used to be optimistic, Steve. I'll tell you that. I used to be a very optimistic person. After last year, I'm not sure I feel quite so optimistic.
2025 will take care of that real quick, right?
It really will. It really
you both
will.
just need to spend more time with me. I can disabuse you of those notions.
I love it.
Look, to be candid, like the banks in Canada have generally, in public, been supportive of moving to an open banking system. Their rationale for being supportive is because they view it as an end to screen scraping and towards more secure ways of accessing data, not dissimilar from what we heard from US banks for many years. But I also want to be clear on the other side of that coin, like the rubber is about to hit the road, right? We're now moving from theory to implementation. And implementation, I mean, Dan can talk about the scars that he has from this. Like that's where you start to see real roadblocks exert themselves, right? So my guess, based on the experience we've had in other markets, is you will start to hear concerns around liability. You will start to hear concerns around payment initiation and whether payment data should be allowed. You will start to hear concerns around the costs that banks have to bear to make these APIs available, and whether the technical standard is sufficiently representing banks versus third parties. So all of the same types of issues we've seen play out in other markets, just with a Canadian flavor, is the fear that I have as we kind of get a little bit further afield.
Yeah, and I think, I won't pretend to be any kind of expert in Canadian administrative law, or at least what we would call administrative law here. But it feels to me like they're in a little bit of I totally agree with everything Steve said. At the same time, I think the banks are in a little bit of a maybe tougher, but also maybe more clear place than the US banks were. It appears, with the benefit of hindsight, that there was this latent thought among some of the US banks that, well, the statute is so broad that maybe when this all just comes out, we can blow it up and we can try to use the broadness of the statute to try to make some colorable argument that none of this, was really ever envisioned in the first place. Now, I think I've been pretty clear that I don't think that's a particularly credible argument. I think we seem to be moving on from that now, which is good. I think it's good to get past that sort of knee-jerk reaction that seemed to happen. But it happened, right? It's a thing that happened, and it frames the last year that all of us have sort of lived through in the space. In Canada, there is no way any bank could have any kind of colorable argument along the lines of the BPI suit, which is that all of this should just go away and was never intended. To your point, Alex, the legislation is voluminous. It's very clear. There's just sort of no room for any doubt about the intention here. Right now, that doesn't mean that the banks or others, right, can't try to throw up roadblocks along the way. They can't sort of, and again, not an expert in Canadian administrative law, although I would like to talk to one. They can't sue on some grounds, for example. They can't have a lot of arguments around how this should be implemented, to the point Steve made. But at the very least, they're starting from a much clearer place. And so assuming that all of this moves forward, I hope that clarity at least gets Canada over the hump that we weren't able to get over when we issued the final rule.
Yeah, that's interesting. I mean, it makes me think of a bunch of different things, right? One is the scope of this is so much larger, right? It's small business and consumer. It's lots of different products, not just transaction accounts. I don't know if any of the Canadian banks have grumbled publicly or otherwise about how much it's going to cost to stand up APIs to support all of this. You'd think, based on the complaints you hear from US banks, that it's going to sink the entire organization if they have to spend money to do this. So there's an implementation question, and I imagine the implementation will be phased in and there'll be lots of different phases and it won't happen all overnight. But the other thing that I am kind of curious about is just again, this goes back to our question about how different markets are. I kind of always got the sense in the US as an example, and I got the sense particularly as 2025 played itself out, that there's almost a desire in certain corners of the regulatory sphere or even legislatively to sort of protect banks from how successful fintech has been in the market, right? We see this right now in the stablecoin debate where it's like banks are actually sort of able to position themselves as like the sympathetic party that needs to be protected by regulation, because if they don't, like the market is too disruptive and it's going to disrupt the banking system and pull deposits out of banks, and that whole dynamic is happening. So in some senses, I think like sometimes regulation can respond or sort of like key off of how successful the market-driven disruption has been or not. I would imagine, and Steve, maybe you can comment on this, in Canada, I mean, it sounds like there really is a desire to increase the amount of competition. And I wouldn't imagine that there's an argument that you could make if you're a bank to regulators saying like, we got to be careful. There might be too much disruption. Like, you know, like, look how many choices Canadian consumers already have. Like, feels like the policy impetus is really grounded in, we want to spur more competition. We want to show Canadian consumers and small business owners things that they haven't imagined that they want, but when they see it, they will want it. Like, is that kind of the animating mentality behind this?
To a degree, but I wouldn't overstate it, Alex. And maybe just to like put a little bit more nuance on the, you know, I'm reacting to your banks as a sympathetic character statement. I think what I might say, same idea, but a different way, right? So when you are a policymaker, you know, particularly a regulator, the system isn't set up to reward you for innovation. The system is set up to punish you for something going wrong, right? And so you are significantly more heavily incentivized to stop bad things from happening or to prevent potential bad things from happening than you are to let new things happen, right?
Yeah.
If you take that into an environment that's already conservative to begin with, then it's not so much about protecting banks or protecting incumbents from the rise of this new market. It's that you are much more susceptible to arguments that somehow this new market presents risks that you cannot possibly comprehend that run the risk of bringing the entire system down, right? And so there is absolutely a trust that banks have built in virtually every country in the world of, you know, being able to weather storms to varying degrees of success, right? But generally speaking, that if you're a customer of a bank, the bank is going to be there. And if it's not there, then your deposits are generally speaking safe, right? It doesn't help matters that sometimes some of the more innovative companies or industries have kind of very public disasters or meltdowns that just help to kind of animate that narrative, right? Of like, just because it's new doesn't mean it's safe, and be careful of things that are new.
Well, we've had a decent number of those types of things over the last couple of years in the U.S. And I guess to your point, like if Canada's watching what's happening in open banking policy in the U.S., they're also watching Synapse meltdown, for example.
One of several examples that you could think of.
And stablecoin yields, right? I mean, like I think I mean, and to sort of take a somewhat contrary view, maybe there is a long-standing tension, at least to some degree, between competition on the one hand in financial regulation and safety and soundness on the other hand. And there's a question, I think, that we're sort of talking about here about where different jurisdictions fall on that spectrum, right? Like, so maybe to Steve's point, Canada falls much more on the small c conservative, correcting towards safety and soundness side of the spectrum. Ironically, in the UK, there's this really, which is another Commonwealth country, you see these competition mandates and you've seen movement in the other direction, I think in particular post-sovereign debt crisis, right? But there is that tension.
And structurally, Canada and the UK are similar and different than the US, right? Like that's another thing that's important to point out is one might have more of a competition mindset, one might have more of a safety and soundness mindset. Structurally, though, they're the same, whereas the US might have both a sort of schizophrenia as it relates to those two mindsets and a much bigger, more diverse market. So it's kind of hard to compare sometimes too.
But here's where I think we're in an interesting moment in Canada and why they're moving forward, right? Like all of these things are having a confluence at the same time. So, Alex, it is not the case, Alex, that you're going to hear Canadian policymakers kind of come out and sing from the mountaintops like it's time for competition in our financial sector. You know, let the innovation flow, right? Unleash the hounds. What they will say, though, is like we are too concentrated. There are services, products, and tools that other markets have that we don't. And the existing way that these product services and tools are accessing your data are not safe, right? And so it's this interesting confluence of like, we need to be more competitive because our largest trade partner is entirely unreliable right now, and we can't count on them. We want to harness growth in the market, but we don't think the way that growth is happening organically is safe enough. And so there's a safety imperative in us moving forward. And we can learn from the mistakes and the good work that other jurisdictions have done in ways that can address the risks that perhaps other jurisdictions didn't realize could come to bear until after they'd let their systems out. And so I think like there's this weird kind of like harmony that these things have created where like if any one of them goes away or becomes less impactful, you might not have the same level of interest or buy-in from very, 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 very senior policymakers in Canada to move this forward as a priority.
Well,
go ahead, Dan.
Just really quickly, maybe a double click on something important that I think Steve said here too. Yeah. There's something that I think we sometimes skeet over in these conversations that Steve identifies about competitiveness as being slightly different to competition, right? And so domestic market competition policy and international competitive policy are both economic policy fields that one might have strong opinions on, but they are different and separate fields. Right. And so I think from a competitiveness perspective, I think you can definitely see where that might militate in favor of Canada at this point, kind of looking at what's happening in the macro picture, looking at all the protectionism and saying, okay, in addition to the domestic market competition policy interest that we've had for a while in an increasing way on consumer-driven banking, which is kind of, distinct from our traditional overcorrecting more towards safety and soundness, we now have this additional competitiveness vector that we really are thinking hard about because of everything going on. And that sort of pushes in the same direction as well. At times, many times, I think those things, competitiveness and domestic market competition, point in opposite directions. But in this particular case, I think they're probably rowing towards consumer-driven banking.
That's a really great point. And one I do think, I'm glad you mentioned it because I think the idea that one of those two things can be maybe more animating at one moment than another is really important too, right? I mean, the idea that Canada, not naturally a place where they're trying to like really spur a ton of competition because they might think of competition domestically as just like risk and a risk to safety and soundness. That's just kind of how they're wired. The idea that like they're sort of being forced onto the iceberg, so to speak, and like we have to compete more in a global market, like open banking and consumer-driven like data portability, like that's an attractive set of conditions for innovators to want to start companies in Canada, right? Like there's this larger point that I think is a really good way of framing it. And quite frankly, something that I worry about in the US with sort of our half steps back that we've been taking on open banking is like, we want this market to be really competitive and to work well for innovators. So I think that's a point well taken. One other thing I wanted to ask about very briefly before I get to right access, which is the thing I want to end on. How does all of what we're talking about overlap with Canadian consumers' right to privacy? Because that comes up, right, depending on the open banking regime and the country that you're in. I remember actually talking to Director Chopra a couple years ago about some of the provisions in the open banking rule in the US that were sort of motivated to a degree by the fact that we don't have like robust data privacy laws in the US, and that this needed to sort of correct for the absence or deficiency there that we had otherwise. What's the sort of mapping of data privacy to open banking in Canada? Maybe Steve, I'll go to you first on that.
Well, to start with, there exists a federal framework for privacy in Canada, whereas none exists in the US today, right? I'm not suggesting that it's as comprehensive as it should be and that there aren't provincial data privacy requirements that live on top of FDATA, but it does exist. It's worth noting, Alex, that for many, many years, the government has been trying to move legislation in Parliament, unsuccessfully so far, that would expand the data privacy regime, but would marry it with a consumer data rights type data portability regime as well, right? So like the general vision is privacy is one important tenet of data control as a consumer, right? Privacy is I'm not letting people have my data who I don't want to have my data, right? I'm going to delete it from where I don't want it. The portability side is, but I am going to give it to entities that I do want to have my data because it's mine and I can benefit from it wherever I want. And so the government has taken this holistic view of like, that is the right kind of modern approach to data privacy. However, that's going to require parliamentary action, which so far they've not been able to do. In the interim, though, if you talk to the Department of Finance, if you talk to now the Bank of Canada, what they will tell you is, look, Parliament is about to move open banking legislation that will create a data portability and data privacy regime for financial data. And so it is really kind of the first use case of this broad theory of consumer data control in Canada, with the hope being that like that's just the first of many sectors that you ultimately get to a full kind of consumer data right over time in Canada.
And there even is language in the Budget Implementation Act, which is where the Consumer Driven Banking Act is housed now, which gets at that sort of long-term goal around PIPEDA, portability in the much broader context. So it's pretty clearly on the roadmap.
Interesting. Okay, that's good to know, and it is interesting because I think I've said this before, I think, but like I sometimes feel like banks' objections to data portability are sort of like made in the context of thinking about their data and not thinking about the gigantic dinosaurs walking above them that they're going to have to compete with on data. And the idea that data portability actually might be like a competitive benefit to institutions when you think about it on a broader economic level rather than just within the industry you currently dominate. So I do think that larger point about data control is really interesting. Let's end by talking about right access. And Dan, maybe I'll go to you first here. Just in a general sense, remind listeners, like when we talk in an open banking data portability lens, what do we mean when we say right access typically?
Yeah, absolutely. So first of all, I'll be really clear that I'm not an engineer here, and there's a technical definition I'm certain somewhere that I'm not going to give. Okay. And if I try to, I'll probably get it wrong. But I think it's kind of beside the point anyway for the purposes of this sort of market and policy discussion. And so the way I think about it is really just pretty simply the ability to, within an interface, write or make changes to something with a consumer's permission, right? And to Steve's point that he made at the top of the conversation, in the open banking context, that's typically been payments. And that goes all the way back to PSD2 in the EU, where you sort of had this AISP versus PISP model, the latter being right access payments, right? And so it has a lot of history. It's actually not really a very new conversation at all in the open banking context. It's actually quite an old conversation. But previously, it's been much more narrowly thought of around payments for the most part, right? Now, fast forward to where we are today and to where Canada is going, and maybe even in some ways, more importantly, just where technology is going too. You see a lot more right access functionality emerging. So Canada has committed to right access legislation by 2027. I'm not certain whether maybe that might have slipped now a little bit at some point, but they've pretty clearly committed to that path. So that's sort of over the horizon, the next stage of consumer-driven banking that they've mapped out in Canada. So we'll eventually see something there. And then beyond that, we've all sort of seen, whether you want to call it agentic commerce or this sort of broader field that's emerging around new AI technologies, new AI capabilities, different use cases that, for example, might allow you to switch payments, might allow you to make payments, but might also just allow you to, switch your card on file. It might allow you to manage a held away account, right? There's a lot of these sort of narrow, different use cases that maybe even if they're not technically right access, they look a lot like right access and giving the consumer the ability to make changes within an interface. And when you pair that with some of the agentic AI use cases or agentic commerce use cases, choose your AI buzzword framework that you want to choose, you can see where these things start to form into a really interesting new set of policy questions. And so one example that I'll give that I just think it's worth it for everyone to go read about a little bit is there's this lawsuit right now actually between Amazon and Perplexity because Perplexity's Comet browser was effectively enabling right access within Amazon's interface. And Amazon wasn't very happy about that. And if you look at some of the legal back and forth over this, it starts to have really significant echoes of the open banking fights that we've seen for years over access to information, over liability, over data security. And a lot of it, look, it's a hard question in the open banking context. Even when you're only thinking about read access, it's an even harder question in the open banking context when you're thinking about write access. And it might be an even harder set of questions beyond the open banking context once you get into broader agentic commerce use cases of all kinds, right? Mm-hmm. And so that's where I think this is going from my perspective.
Yeah, I mean, Steve, I want you to add to this because I think from what I understand of kind of the right side of it, like this is where disruption created by these regulatory systems really starts to like have some teeth, right? Because it's great that I can pull my data in and I can look at it and I compare and maybe I even get like sort of some notifications that, yeah, you're not getting quite the right yield here, or you could optimize it by doing this differently or what have you. There's a big difference between being told that as a user and being told, hey, like with your authorization, we'll just fix all this for you. Or if you just want to set up parameters for how you want your finances or your commerce experiences or whatever to work, we'll just execute that with your authorization without even checking with you. And, mechanically, as Dan was saying, that used to be something that was kind of rigid and based on deterministic systems and maybe not that intelligent. And so the use cases weren't as scary. Now we have AI that can do this in a much more sort of intelligent, probabilistic, conversational way. And it's not really, I mean, we've seen how much banks in the US have freaked out about pay by bank, which is a relatively narrow implementation of write access for payment initiation that cuts out existing payment credentials. Like that concern magnified by 1,000, not just from a competitive disruption perspective, but from a, hey, if this breaks, am I going to get the call? Am I liable for something going wrong here? AI hallucinates. Like the risk on all fronts seems much, much higher with write. How do you see sort of the Canadian market and Canadian regulators kind of wrestling with some of those challenges?
Well, let me take the bullish side of this for a second, Alex, right? And I'll argue that there's the potential for write access to solve some of the problems that you just articulated, although I confess, there are issues that will have to be confronted. You mentioned pay by bank. Right. I would argue, Alex, that's not write access. That's read access that is then taking read-only information, going back to the ACH rails outside of the open banking system, using an entirely separate process to transact. And then the data may change when you read the information another time because there's been an ACH pull from your account that's then been instructed, right? The reason I bring that up is because liability is ultimately where this all goes, right? Every single time you have a conversation about open banking, write access, read access, it's always about, well, who's on the hook if something goes wrong? Having spent the better part of more than a decade thinking about these things, the fundamental problem with liability is traceability. How can you say with 100% certainty who is responsible for your data being misused? In a world where, I will speak for myself, I know that I have been the victim of at least 15 data breaches. If I get a notification that somebody's tried to open up a loan in my name somewhere, I've got absolutely no idea which data breach they got my data from or who I should go call because they owe me credit monitoring for a year. Write access has the potential to change that, right? And so if everybody that has write access needs to be regulated, and if all of these transactions, I don't just mean payments, to be clear, I mean the changing of data is happening on the open banking APIs that we've all designed and run and implemented, there is now a traceable ledger that says, all right, at this date, at this time, Steve Fintech Company just changed the following information on my bank account. And if it turns out that I call my bank or I call that Fintech and I say, that wasn't me, you got it wrong, but we know who was responsible for that, right? And so you've built traceability into the system there. I am not suggesting that, we should jump into it and just kind of deploy that writ large because that solves to some degree or helps the traceability problem. But if you think more broadly about like open banking read-only access being kind of a novel technology solution that's built atop antiquated other rails that exist for how data and money flows in our system, write access is a way to kind of integrate that in a much more comprehensive manner that can provide for all this to happen within one ecosystem as opposed to through myriad different ecosystems instead.
So the idea being that like in a narrow sense with data, if I'm just getting read access to data, having the insight into that data allows me to then disrupt whatever the status quo is because I have what I need. I know what I need in order to take action, but it might happen through other rails and it might involve certain workarounds that even potentially introduce more risk into the system. Whereas if we think of, again, from a policy perspective, open banking and open finance as more of like the switchboard that consumers have total control over, and it creates sort of a central ledger for everything that's happening with their data and how it's used, that actually potentially introduces more traceability, more control, and more ability to like accurately assign the liability when something goes wrong.
That's right. And I want to be super clear, Alex. I'm not saying that it's a panacea where like there's no more risk and liability is perfectly apportioned, but I do think it's a way of creating a more traceable system with more control that may also have the benefit of not creating duplication or kind of data accuracy problems because there's all these different systems that the data has to flow through in the read-only environment.
Yeah, no, absolutely. Dan, going back to something you said before, how do you think the like sort of data fights that we're now seeing play out between AI labs and banks, AI labs and retailers, like how do you think that will filter back into some of these data portability and open banking discussions? Because you're right, like it does rhyme with what we have been fighting about in open banking for years. And I think in some senses it has the potential to change people's perspectives, whether it's incumbents or policymakers, as to like the right way to structure some of these things. Because like if you were concerned about screen scraping before, like allow me to introduce you to OpenAI. They like to screen scrape. Like that does seem like something that would change the tenor of these policy discussions.
Yeah, absolutely. I mean, at times I kind of feel like all of this that we're talking about could just be sort of a prelude to that broader thing that might be coming for this debate, right? And to be absolutely clear, it's too early to know if it is. We don't really know about consumer adoption to a large degree yet. We don't really know, about the financial side of a lot of this and how it's going to work. And so I don't want to project out too far in an environment where we are still pretty uncertain. But at the same time, you can imagine some of these lawsuits starting to set different precedents that may or may not matter depending on the use case, right? You can imagine them starting to influence how policymakers, both at the state level and at the federal level, might think about these issues. If somebody shows up in a state senator's office somewhere in the country because they're really concerned about what's happening between Perplexity and Amazon and some of the other similar types of fights that might be developing in the AI sector, they might really never even get to a lot of the learnings that we've had in the open banking context before they start writing draft legislation and introducing a bill, right? And so you could start to see this influencing the debate in those ways, where all of a sudden now you have a cross-cutting and maybe even cross-sectoral set of policies being considered that don't maybe have the appreciation for all the learnings that we've done here. And maybe they think of things that we haven't, and at the same time, maybe there are important learnings in the same way as there's important learnings in the U.S. And in Canada from the experience of international regulators around open banking. So I think it's probably too soon to be too confident about exactly how this is going to play out, but you can just sort of start to see this simmering. And I think it's something that we all need to keep a really close eye on in the open banking and broader fintech sector, because this is going to get pretty big one way or another, I think.
Yeah, no, I totally agree with that. All right, Steve, the last word is yours. When is all this going to happen in Canada? What's the timeline?
I'll tell you what the timeline's supposed to be, Alex, and then I'll give a really important caveat to it.
Yeah.
The read-only system is supposed to be up and running by the end of this year, by the end of 2026.
Up and running.
Functional, implemented. Canadian consumers and small businesses are supposed to be able to access and share their data with accredited third parties in a read-only environment by December 31, 2026. That is the stated goal. Dan mentioned this earlier. The right access legislation is intended to be introduced by the middle of next year at the latest. And then one would presume implemented some point in 2028. Now, two notes. One, in not only the open banking context, but just other financial services innovation contexts, the Canadian government and the Canadian financial sector have set deadlines and blown past them many, many times before. The real-time rail being one example of that. Open banking itself was supposed to go live in 2024, I think, and then it was 2025.
This is what I've commented on in my newsletter and gotten in trouble with my Canadian friends over, is the delays.
And this is something that American policymakers would never do.
No. That's right. That's right. Absolutely not.
So that's the stated timeline. Now, we talked about politics at the beginning, and maybe there's a nice symmetry to ending this with politics at the end, Alex, which is ultimately all policy developments are beholden to politics. And the same is absolutely true in Canada, where because of these kind of geopolitical and macro political tensions, the prime minister is reportedly debating calling snap elections that would, he hopes, give him more of a mandate to enter into trade negotiations with the US later in the year. If that happens, at a minimum, everything is delayed by 2 months because everything stops in Canada while the elections are happening. And then we need not look very far back into the recent history to see that sometimes calling snap elections can backfire on you and the outcome is not what you thought it was going to be. And so if the snap elections happen and they result in a different government, I think all bets might be off in terms of timing, composition, kind of legislative authority, regulations, in which case it's a little bit unclear how this would happen. Although I should note the Conservatives have called for open banking as part of their party platform for years and years and years and years.
Got it. Okay. So the quantum uncertainty of open banking, regardless of what market you're in, continues to be a true and persistent fact. Still very, very interesting. I needed a primer on all things Canadian open banking, and I think folks listening did too. Thank you guys so much for coming on and sharing that. And we'll be sure to have you back to check in on the US, Canada, any number of other markets I'm sure that we'll be dealing with over time. Thank you very much. This was great.
Thank you, Alex.
Yeah, thanks, Alex.